So we all know that TradingView has thousands of indicators. The moment you open that indicators menu, it feels like a flood of options coming at you all at once. It's overwhelming and scary. But here's the truth most traders will never talk about. The hard part isn't finding random indicators. It's finding a combination that actually works together and gives you a clear, repeatable structure. Most traders get stuck right there. So, today, I'm going to save you a lot of frustration. I'll share the exact 2 indicator setup I personally use, along with simple, step-by-step rules you can follow. Quick disclaimer, this is for educational purposes only. I'm not guaranteeing profits, and trading always involves risk.
Step 1. Add the first indicator, trend structure. Open TradingView and load a clean, empty chart. Use any market you're comfortable with, Forex, crypto, indices, or stocks. For best clarity while learning, use a time frame between 5 minutes and 1 hour. Click the Indicators button at the top of the chart interface. In the search bar, carefully type Log Pressure Envelope by Boss Waves. When the correct indicator appears in the list, click on it once to add it to your chart. After the indicator loads, look to the left or top of your chart and locate the indicator name, then click the Settings icon next to it. Inside the Inputs tab, perform the following configuration. Find line opacity. Change the value from 85 to 75. This softens the visual strength of the lines so price candles remain clearly visible. Now click into the Style tab to simplify the chart display. Hide unnecessary background fills. Turn off extra labels that clutter the chart. Keep visible only the outer band's envelope, the center midline, buy and sell signal markers. Click OK to apply your settings and return to the live chart. Understanding what this step gives you. Identify the center midline of the indicator. This line is the core of trend direction. When a sell signal prints on the chart and the midline turns orange, the market structure is considered bearish. At this moment, you do not enter a trade, you only mark bias. When a buy signal prints and the midline turns sky blue, the structure becomes bullish. Again, no trade is taken yet. We are only preparing directional bias. Rules to follow at this stage. Do not enter trades from this step alone. Do not guess or anticipate reversals. Only observe structure shifts created by the midline and signals. Treat this step as your trend compass, not your entry trigger.
Step 2. Add the confirmation indicator. On your open TradingView chart, click the Indicators button at the top of the screen. In the search bar, carefully type Enhanced ROC. From the results list, click the correct indicator to add it to your chart. Once the indicator appears, usually below the price chart, locate the indicator name and click the Settings icon next to it. Adjusting the inputs. Inside the Inputs tab, find the setting labeled ROC Period. Change the value from 15 to 40. This slows the indicator down and removes noisy, weak momentum signals. Double-check that the value is correctly set to 40 before moving to the next tab. Cleaning the visuals. Click on the Style tab to customize the appearance. Hide any elements that add unnecessary clutter, such as extra lines, markers, background noise, and any unneeded labels. Keep only the clean bullish and bearish zones visible so the chart remains easy to read. The green momentum area, the red momentum area. Click OK to save and apply your settings. How to read the indicator. When the indicator shows a green zone, it represents bullish momentum. This means buyers have control. When the indicator shows a red zone, it represents bearish momentum. This means sellers are in control. Do not take trades based on this indicator alone. This is only a confirmation tool, not an entry trigger. Your job at this stage is only to check alignment between trend structure from step 1 and momentum direction from this indicator.
Step 3. The trading rules. Simple and clean. Buy setup rules. Only consider a buy trade when all of these conditions line up clearly and in the correct order. First, the log pressure envelope must print a valid buy signal on the chart. Second, the midline must flip to sky blue, confirming the market structure has shifted bullish and price is being supported. Third, the enhanced ROC must be in a green zone, showing that bullish momentum is actually present and the move isn't just a weak bounce. Fourth, wait for a bullish candle to fully close. This candle acts as your final confirmation and prevents early or fake breakouts. You should ignore the setup completely if even one of these conditions is missing or delayed. Entry rules. Enter the buy only after the bullish candle closes, not during the candle. This keeps your entries clean and reduces false triggers. Stop loss placement. Place the stop loss just below the midline, giving the trade enough room to breathe while still protecting you if structure fails. Take profit target. Set your take profit target using a 1 to 1.5 risk to reward ratio. That means for every 1 unit of risk, you target 1.5 units of reward. This keeps the system balanced, disciplined, and consistent across all trades. Sell setup rules. Only take a sell trade when all conditions align clearly and in the correct sequence. First, the log pressure envelope must print a clear sell signal on the chart. No signal means no trade. Second, the midline must turn orange, confirming bearish structure and showing that price is starting to respect resistance instead of support. Third, the enhanced ROC must be in a red, bearish zone, proving that downside momentum is active and sellers are in control. Fourth, wait for a bearish candle to fully close. This candle is your final confirmation that the move isn't just a temporary spike. If any of these conditions are missing or unclear, the trade is skipped completely. Entry rules. Enter the sell trade only after the bearish candle has fully closed, never during the candle. This prevents false breakouts and emotional entries. Stop loss placement. Place your stop loss just above the midline so the trade is protected if price reclaims the structure. Take profit target. Set your target using a 1 to 1.5 risk to reward ratio, keeping your risk controlled and your winners larger than your losses. Keep in mind, no strategy works 100% of the time. Expect losses and be prepared. Always backtest on your preferred market and time frame before using real money. Consistency matters more than any single trade. Follow the rules. Risk management is more important than perfect entries. Stick to stops and position sizing. And that's the full strategy. If this helps you, thanks for watching, and I'll see you in the next one. Happy trading!